Hey yo, it's been a minute since we've done one of these, so let's get back into it as the year really kicks into full gear. You're watching 새끼들, and this is what we're watching for the week of March 8th to the 12th. And today we're talking about holdings and parent companies. Now before we continue, I want to remind you that this channel is for educational purposes only and is not meant to be a replacement for any legal or financial advice from a paid professional. No mention of any company on this channel is an endorsement for investment in that company, and you should definitely look into them before making any decisions on whether or not to buy, hold, or sell. We're just out here to help you achieve your goals by laying out the table for you. After that, it's all on you to pick your spots. Now let's get to it. Now I know I always say that it's going to be a short one at the beginning of these videos and they end up being like 10 to 15 minutes long, so I'm not going to do that here. I'm going to try my best not to. Quick explanation is all you're going to get because I recognize that we all have other stuff to do. So let's get to it. Remember, when you're buying a stock, you're buying a company. And when you're buying a company, you're buying a corporate entity that uses its money to develop a product or a service that helps people, other businesses, animals, or whatever have you to achieve a particular goal. Now, in reality, a lot of the biggest companies in Korea are majority or large minority owned by parent companies or holding companies. Essentially, what these companies do is, well, nothing really. They don't have a customer base, a product, a service, or anything that you might associate with a traditional public or private-facing company. Instead, their primary function is to purchase and maintain the controlling or minority share of other smaller companies. Some of the biggest companies in the world are really just holding companies, with the most noteworthy probably being Warren Buffett and Charlie Munger's Berkshire Hathaway. There's also Johnson & Johnson, which a lot of people know as kind of being like a home goods type thing, but ultimately they really are just a holding company that owns shares in a lot of other companies within that market. Now in Korea, a lot of the major conglomerates and chaebols have converted into holdings companies and often have lent their names to their subsidiaries or other branches of their operations. Today we're going to talk about two of the biggest holding companies in the country and rattle off their most significant subsidiaries, and hopefully this won't stretch as long as other videos that have gone on way too long. Alright, the first holding company that I want to talk about is a household name whether in Korea or otherwise, and I'm talking about LG. Now LG is one of the few Korean companies with ADRs, meaning that they have a separate listing on the US market for investors lacking access to the KRX. Now LG may be famous for their cell phones and home appliances abroad, but the company itself actually started as a plastics and chemical based company. That is to say, what we currently refer to as LG Chemical is actually the original jumping off point for what is now Korea's fourth largest chaebol. Since it was founded, LG has expanded into a variety of industries that have incorporated themselves independently and are now also listed out on the stock market. Over the course of time, LG converted into a holdings company so that their subsidiaries could run and operate independently and cut inefficiencies. So let's go ahead and bang out a few of their top subsidiaries. First, you have the OG LG Chem, which LG Corp owns only a 30% stake in. Then there's LG Electronics, of which they hold another 30% stake. You have LG U+, their telecom, of which they own a 38% stake in, LG Display, of which they own another 38%, and a really big heavy hitter in LG Household and Healthcare, aka LG 건강생활, and they own 31% of that as well. Now it's clear looking at these numbers that LG as a parent holding company doesn't actually own the controlling interest of these companies. So what is the point of even having this in your portfolio when in reality you could just go out and buy a share of the more successful subsidiaries and cut out the fat? Well, that's kind of a question that you need to ask for yourself. See, there are a lot of benefits for companies to belong to a larger entity, as it allows them to streamline their products or services through any complementary subsidiaries. For shareholders of those subsidiaries, it helps with the profitability of those entities, which is great. But if something within the company were to go bad, then you would have little to no protection from it, since as a shareholder you would also share the liability side of ownership. Comparatively, holdings companies as individual entities may establish limited liability relationships with their subsidiaries, so in a way you could be able to benefit from when the company does well and be a lot less exposed for when they're not doing so hot. Now, I know this kind of sounds like a fund, and well, yeah. The significant difference though is that funds don't tend to hold large enough stakes in companies to have a significant impact on shareholder meetings or anything of that sort really. Comparatively, even with a minority interest stake, parent companies can have a lot of sway in the goings-on of their subsidiaries. So a good thing to do when looking at parent companies is seeing how they've handled their relationships with their subsidiaries. And with that being said, I'm gonna mention the other company that I wanted to talk about, which is SK Holdings. And this holdings company also has a lot of sway. Now, SK is a little less of an international household name, but they're a giant in the IT sector, particularly in Korea. Their most noteworthy holding, SK Hynix, of which they own a 21% stake, is one of the largest semiconductor companies in the world and rivals Samsung as one of the largest companies in Korea. After that, you have a few more companies that you may recognize, like SK Telecom or SKT, of which they own a 30% share. Then you have SK Innovation, which actually may have a shoe in the door in the EV battery sector. Finally, you have SK Chemicals, SK Engineering and Construction, and SK CNC to round out the group. Now, I want to actually do a little thing where we compare the LG and the SK families, which I think that you should also take a look at. So generally, when valuing a holding company, it's actually best to evaluate the quality of their subsidiaries, and the subsidiaries, since the holding company itself does little in the way of production of goods and services. For example, if I'm comparing these two companies, LG and SK, it would be more beneficial to compare on account of the summation of the quality of their underlying holdings, aka their net asset value. So if, for example, I believe that the LG family of LG Chem, U+, and Home and Healthcare is generally more valuable than the SK family of SK Innovation, SK Telecom, and SK Hynix, then I would be willing to pay a premium on the price of that stock. Basically, I would care less about the value of the company's income versus the value of their assets. But let's actually do a thing. Let's compare them side by side. Now, when we do this, we can see that their price to book are pretty much the same, but SK's market cap is around $270 million higher than that of LG's after conversion. This suggests that SK is a significantly larger operation, and when comparing the relative value of their largest subsidiaries, SK Hynix and LG Chem, who sit at 101 trillion and 64 trillion won respectively, we can see how this could be true. But the question then becomes, does this actually matter if you're getting the same value for each stock on a per share basis? I mean, I'd say yes, but it depends on your goals. See, while SK seems like a better buy simply based on the quality of their subsidiaries and market cap, LG has a consistently better dividend with an average of 2.58 yield in comparison to SK's 2.36 yield average over the past 5 years. This, combined with a lower beta or a smaller fluctuation of the stock's price over time, and a more affordable price tag for small money retail investors, LG could be a more reliable and ideal holding for cash flows when you compare it to SK. Still, if you're looking for growth and have more money to invest and less need for high and consistent cash inflows, you may like SK for its greater growth potential and primary sectors of operation, i.e. tech, which is pretty hot right now. In general, holdings companies will trade at much lower than their net asset value, which is part of why people like them over buying individual shares of their holdings. But considerations must be made beyond the price to NAV, including but not limited to their dividend history and growth potential. Hopefully I've been able to shed a little bit of light on what those things may be. If you have any questions, ask in the comment section below. But wait, isn't Samsung Group also a holdings company? Why not talk about them? Well, they're private, so there actually aren't any publicly available shares for their holding company, so you basically have to rely on buying direct shares of their subsidiaries. That's not a big deal though. We got a big market and there are a lot of places to make money anyways. Alright, that's enough from me. There have been a bunch of changes in my personal life, so time is not as plentiful as it once was, but don't worry too much. We'll try to keep the content coming and get back to the same level of activity as before in a few short weeks. Otherwise, take it easy, keep your chin up during this market adjustment, and remember, growth stocks are great in a bull market, but value and defensive stocks are stronger when it's bearish. Depending on what's going on in the market, it may be time to diversify into value stocks if you've just kind of been riding the trendy stocks for the past few months, but I don't know, trust your gut. But in general, if you're holding for the long term and your plans are very long term, then you shouldn't really care too much about paying 1 or 2 extra thousand won on a stock when the cash flows are going to be way bigger than that, to the point where it's almost negligible. Either way, think before you buy, know what you own, know why you own it, and I'll catch you on the flip side. Peace.